never time the market. That's long-term investing 101 type advice. However, knowing some adage doesn't make the anxiety of some purchases just disappear. We still crave reassurance that we're buying a stock near the trough of an otherwise long bull run. We desperately want to buy when we believe the stock is on sale. And that moment can be most tense leading up to the earnings release. Do you have earnings anxiety? Welcome to The Quality Investor. This video is inspired by some comments I got on a video I did about United Health Group's less than stellar 2024 performance. Q1 2024 earnings season kicks off about a week from now, and one commenter left a comment on that UNH video that perfectly encapsulates the mindset that a long-term quality investor should have when buying any stock. It ignores attempts at trying to time the market, but also reveals how to handle buying stock in that dreaded earnings time frame. There really is nothing worse than buying stock and then seeing that stock drop 10 to 15% 4 days later after the earnings release. So today, we are discussing that comment, and we are going to apply it to a stock that's been on a bit of a dip the last couple weeks, and earnings are coming up fast. Before we get into it though, remember to hit that like button and subscribe to the channel to stay up to date on all the quality businesses in the market. On my video, Hammered on Wall Street, United Health Group keeps falling, commenter Business with Redbeard left this fantastic approach to buying businesses right around earnings releases. He said, "For people nervous about big news affecting their favorite stock ahead of earnings, I'd recommend to buy some now and then some after earnings. Could be 60% now, 40% later, or 30% now and 70% later. Whatever you're comfortable with. If it goes up after earnings, congrats, you've already made a small gain. If it goes down after earnings and you really believe in it, congrats, you can purchase more shares for even longer term gains. Trust me, you don't want to be anxious quarter after quarter for years down the road." One of my favorite businesses, Visa, ticker V, is down about 5% since March 21st. This is by no means a big dip, but Visa has always been one of those businesses that seems to always continue growing. And so any kind of pullback in that stock is always a good opportunity to pick up some more shares. But Visa's earnings are also about to release in 2 weeks. And while this isn't a prediction about the economy, I do think Q1 earnings in general might be a bit lagging this quarter. It seems that a lot of macro data isn't going in the right direction, but this isn't a macro channel, so I'm not going to go into any detail here except to say I do think some stocks across my portfolio are going to see some negative price action as earnings trickle out. Anyways, back to the comment. Let's say that our regular purchase coincides with the earnings release, or we have some extra cash that we want to get invested into the market. Redbeard's advice is basically splitting the purchase and using a percentage to buy right before earnings and the rest right after earnings. If it goes up, hey, you made a nice gain. If it goes down, no worries, you can buy even more shares. The most important thing in the comment though is this: you really believe in it. You must have rock solid confidence in this business to apply this advice properly, meaning you have a long-term growth thesis for this business, believe it worthy of dollar cost averaging, and view any drawdowns as an opportunity. Otherwise, you will have that dreaded earnings anxiety. And as Redbeard concludes, you don't want to be anxious quarter after quarter, years down the road. So how does this relate to Visa? Well, let me give a quick snapshot of my valuation and my strategy for this quality business. Regular viewers of this channel know how bullish I am on Visa. Visa is a top 3 business in the world with top-notch management and a runway for growth that stretches for years ahead. All my Visa videos are linked in the description below. Like I said, Visa's down about 5% since March 21st. Now, that's not a big dip, but it is enough to get it back into my consideration range. And like Redbeard's comments said, you have to really believe in this stock. And Visa is one of my rock solid investments. Just take a look at the incredible growth Visa's had over the last 15 years or so. Virtually every metric for Visa has grown very consistently over the last 10 years. Revenue, gross profit, operating income, earnings per share, all of it has just grown so steadily. Not only that, Visa is an incredibly asset-light business. Look at the capital expenditure they have to use in order to just maintain their position in the market. It's the black bar on this chart here, and the trailing 12 is at just $1 billion compared to their operating cash flow of $20.2 billion. That means they barely have to reinvest any of their cash in order to continue to grow the business. Visa has a return on invested capital of nearly 30%. And because they have such a great return on the capital they do have invested and have to invest so little on a going forward basis, they essentially have a ton of extra cash that they can distribute to shareholders. And you can see they do that through the use of their very nice growing dividend, 20% last year, and then 18.5% over the last 10 years per year. And they also buy back their shares at an incredible rate. Over the last 10 years, they've bought back over 2% of their shares on an annual basis. And looking at their margins, they have a gross margin of 80%. Their operating margin is 67%. Their free cash flow margin is 60%. So you can see why I have so much confidence in Visa as a business. It just has such an impeccable business model. And most importantly, it earns cash hand over fist. And cash is what gets distributed to shareholders. But like I mentioned earlier in the video, a lot of the macro metrics out there for the economy are not going very well. And Visa did experience a bit of a drop when they had their Q1 2024 earnings release. You can see here there's a bit of a tick down in their free cash flow. Trailing 12 is at 19.1, where their fiscal year end was at 19.7 billion. And you can see that drop here as well, and the free cash flow per share. And one of the things that Visa cited last quarter after the release was that they had lower than expected transaction volume. Now that's basically what drives Visa's entire business. And if the economy is slowing down, as some people out there are suggesting, and as some businesses have already guided down on their forecasts. Look at Ulta Beauty as an example. I don't expect Visa to have a banging earnings report, which means they're probably going to drop a little bit more after their earnings release. So when thinking over my regular purchase this past week, I had a lot of cash on hand because many of the businesses I currently own are high enough that I can't justify buying more at these prices. Like I always say, I want to buy at a fair price. On the other hand, earnings is just around the corner for many of these businesses, and I've already conveyed how skeptical I am of what those results are going to be. I'm not going to go into the full-on valuation here for Visa. However, I just want to show you what I'm kind of expecting for this quarter. So this is my trailing 12 updates here. And if earnings for Visa are what analysts pretty much expect them to be, their trailing 12 at that point will be at $33.99 billion in revenue for the trailing 12 revenue. My revenue is coming just under what I predicted for the entirety of year one. Ever so slightly, not a lot, but it is still below. Operating profit as well is coming just under what my expectation was for year one as a whole. And that's due to the margins coming in a little bit less than what we expected. I was expecting about 66% operating margin for the year. And looking at that all-important free cash flow number, I'm coming in actually a little bit above what I projected in total for free cash flow, $8.6 billion here, though I did predict free cash flow to be down 6% in year one to begin with. Either way, I do feel like I'm slightly behind what my projections are for year one, and thus we might see some drops in the market for Visa. Right now, Visa's trading at $274.48. And combining my two valuations for DCF and the dividend discount model, I'm getting to a valuation average here of $303.39, which is actually a 10.5% upside from what the current price is. Now, given my risk tolerance, I have no problem applying just a 10% margin of safety for Visa. So even though the recommendation for that on my valuation is a wait, and the acceptable buy price is at $273 here, I don't really have too much of a problem buying into Visa at this price. I do think Visa's always going to be trading at a slight premium. That said, in line with what Redbeard was saying in his comment, I am buying just a little bit now, and I'm going to be waiting until after the earnings to see how I want to invest the rest of my cash from this regular buy. However, if anything, given the current inflation fiasco out there in the markets, it's very likely Visa may come down even more before earnings. Visa ended the day down 0.8%. I was actually surprised it wasn't closer to 1%, given what was going on in the rest of the market. And like I said before, I am extremely bullish on Visa. And if they have an incredible blowout earnings, then I would have no problem with a 20% margin of safety and looking at my bull case on Visa. But when earnings comes around, I'll do a much more thorough showcase of Visa and what I believe the proper growth assumptions are. And with that said, I really want to thank Business with Redbeard for his stellar comment. I want the comment section on my channel to be a place where we can all learn from each other and give each other great advice. So please keep those amazing comments coming. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.